Well, we're definitely excited about the celebrity endorsements telling people about Bitcoin and cryptocurrency. At the same time, the White House team, including the Department of Homeland Security, is monitoring cryptocurrencies and the blockchain situation. The U.S. Federal Reserve says that cryptocurrencies pose a threat to our worldwide financial stability, and surveillance with and from all Bitcoin exchanges is being encouraged to prevent the Bitcoin futures manipulation. It is clear that the futures now, and that the futures being aimed at accumulating Bitcoin and cryptocurrency as a very, very valuable asset, as an emerging asset class. The question is, are banks still nervous of Bitcoin as a currency, or how it could liberate people from the clutches of the government-backed fiat around the world? And what can you expect to happen as this literal digital gold rush liberates people around the world and 99.99% of the world feels the fear of missing out? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Whether you're new or not, tap that like button, subscribe to show your support. It helps other people find this content, and leave your questions and comments as you have them so your voice is heard as part of this larger community. In this show, we're going to be talking about Bitcoin surveillance. We're going to be talking about the pivoting shifts from regulators and financial institutions and people around the world being for and then against and then for Bitcoin. And as we see Bitcoin and cryptocurrencies emerging as this new asset class that people can no longer ignore, what are the current consequences, repercussions, situations, events that are taking place which could have deeper consequences in the weeks and months and years to come? Before we get into all of that, I just want to say thanks for showing up. Thanks for being here. I know it's been a couple days since we've made a video. I've been going through, I suppose, a lot in my own way, even though I'm used to handling a lot. You know, just I have a lot going on in terms of my family and my kids, and you know, taking care of issues with you know, family and child support and legal situations, and then on top of that, you know, just having a yearly, you know, my yearly checkup, and you know, having a situation where, you know, the doctor is giving the exam, and at this one point in the exam, the doctor's eye sort of twitches. And my first thought is, that's not good. And my second thought is, you know, this person would not be a great poker player. But, you know, with that being said, you know, it's just issues that I'm dealing with, trying to get things figured out, straightened out, and just living life as we move forward, you know, still having a lot of things in my background to maintain, you know, food on the table and electricity for, you know, reading and writing and living, let alone electricity for anything else. But with that being said, thanks for supporting me. Thanks for sticking around. Thanks for consuming this content with me. And without further ado, let's take a look at the market. Let's peek around at the news, and then let's discuss. So starting over here at coinmarketcap.com, we're living in a world with over 1,325 different cryptocurrencies. Total market capitalization is $356 billion, past 24-hour trading volume, almost $15 billion. Bitcoin dominance, 55.7%. It's just huge. The total market capitalization of Bitcoin alone is nearing the $2 trillion or $200 billion marks, which is the $0.2 trillion. Specifically, it's north of $198 billion current Bitcoin price. We're definitely looking like we're going to hit that $12,000 before the end of the year. Maybe stick that landing above it. And some people are wondering if we're even going to reach $13,000 before the end of the year, since we have a whole 25 days left. And the Bitcoin's futures exchange are going to be, you know, added on as soon as, what is it, the 11th or the 18th? Very, very soon. A lot of volume happening in Bitcoin. There's only 16.7 million Bitcoins. Everybody wants one. It's, you know, it was difficult for most people to get one Bitcoin when it was $1,000. it's definitely, I suppose, exponentially more difficult for people to get one full Bitcoin today. And what I would just encourage for you and for all the people in your life is to recognize that human beings have a tendency to want whole numbers. In the world of cryptocurrency, get away from that. Recognize that you might not have a whole number. You might not have a whole Bitcoin or a whole Ethereum, or, you might not have a whole Litecoin, right? But I wouldn't get focused on the whole numbers. I would recognize that if Bitcoin goes to $1 million, and if you only have 1/10 of a Bitcoin, that 1/10 of a Bitcoin is going to increase still from these numbers of about $1,100 for that 1/10 of a Bitcoin to, $100,000 if the full Bitcoin, or when the full Bitcoin is $1 million. So, don't get hooked into having a whole number. Just get 1/20th of a Bitcoin, get 1/10 of a Bitcoin, get 1/50th of a Bitcoin, get 1/100th of a Bitcoin, right? Just get a wallet, have some skin in the game, just understand how this works, how this, operates, so you can be more familiar with yourself and then make your own decisions moving forward. I wanted to start mentioning to people, I've been talking about a lot of these coins for a long time. I was listening to this interview with Ken Bozak and Charlie Lee. It wasn't too long ago, fairly recently. Definitely recommend you go check out that interview with Ken Bozak and Charlie Lee, the creator, founder of Litecoin. But Charlie Lee, who actually worked at Coinbase, which most people are really using in America to buy and sell Bitcoin, Ethereum, Litecoin, what he was saying is that the next easiest coin for Coinbase to implement would be Ethereum Classic. And it makes a lot of sense. They already have Ethereum plugged in there. They could probably easily get Ethereum Classic in there as well. Barry Silbert connected to Coinbase, Barry Silbert connected to the Ethereum Classic Investment Trust. I'm sure there's a aligned interest to increase the amount of people who can purchase Ethereum Classic and then increase its value inside that investment trust. So I just want to throw out there that the Ethereum Classic, according to that interview from Charlie Lee, is definitely a very high contender to be released in Coinbase. We know Coinbase wants to release a lot of coins in 2018. It's like a product. They really want to sell more boxes of items. And Ethereum Classic could be one of the big winners in the near future. All right, so let's talk about the news. Let's get into the news over here. So, and before we really get deep into the news, let's just touch base where we were. There's JP Morgan Chase, Jamie Dimon. They've been saying a lot of bad things about Bitcoin, a lot of bad things about decentralized currencies, even though they've been fairly positive around the blockchain technology and the distributed ledger technology. JP Morgan is just continuing to double down on the reversal that Bitcoin is a fraud, and they're just doubling down that Bitcoin is actually an emerging asset class that has huge potential to potentially be the next digital gold. And so they're saying that the launch of the Bitcoin futures has the potential to add legitimacy, it actually does add legitimacy, and thus increases the appeal of the cryptocurrency market to both the original retail and institutional investors who, aren't traditionally who are traditionally a part of the normal markets of stocks and bonds and derivatives and the like. And so what they're saying is that Bitcoin is still falling short. Man, the people are always hitting up on you where you fall short, and they're never hitting up about the successes, right? I don't know. So there's where Bitcoin still falls short is with the valuation compared to gold, where gold is a $6 trillion valuation, as we just saw a second ago. Bitcoin is at the $0.2 trillion valuation. But they also recognize that the huge growth spurt could make cryptocurrencies match or even surpass the current value of gold, and then see it as an even greater investable asset. And so is this good news for the banks? This is great news for the banks, because as people continue to move away from fiat, as people are recognizing the benefits of cryptocurrency as an alternative to fiat, and as people are looking at cryptocurrency and they're recognizing that it doesn't have the same limitations and manipulations that gold has, more and more people are going to be turning to cryptocurrencies, and the banks are going to be winning, at least in the short and medium term, because the banks are going to be making money in terms of the fees. Banks are going to be making money in terms of the trades. Banks are going to be making money in terms of the consultations and the systems, that are in place. They're definitely continuing their places as middlemen, filing all sorts of patents, hiring people, working with companies to adapt and evolve with this technology so they can be a part of this new system, a part of this new ecosystem, a part of this new industrial order, instead of being rolled over and buried by the layers of new technology that are going to be, falling onto the earth around us. And so the banks were nervous, according to this article, about Bitcoin as a currency, and they were nervous about how it could liberate people from the clutches of the government-backed fiat. A lot of people are wondering, is Bitcoin a great investment? Is Bitcoin an investment at all? Is Bitcoin just this funny money risk? And what a lot of people recognize in the space, and what more and more people are becoming aware of, is that Bitcoin is absolutely not an investment. Cryptocurrency, decentralized cryptocurrency, this is not an investment at all. This is an exit. People are exiting to cryptocurrencies. They are moving to cryptocurrencies as a store of wealth. They're moving to cryptocurrencies as payment transactions. They are moving to cryptocurrencies to secure their sovereignty, their privacy, their strength in many, many different ways. And they're exiting away from the dollar and the control, the manipulation, the, just the weak value that it has in terms of creating wealth and maintaining wealth for the people. People aren't investing in cryptocurrency. People are exiting fiat. And so this is exactly what is happening. Excuse me. And so the future is now aimed at accumulating Bitcoin, as we see that by merchants, we see that by banks, we see that by all sorts of people and companies around the space. We see that by governments, we see that by regulators, that there's just a groundwork being laid for these things to exist. And there's just this literal digital gold rush of what's happening. It is not just JP Morgan Chase. It's billionaire Mark Cuban, who used to say Bitcoin was a fraud, and now he's saying it's great because he had a chance to purchase lots of Bitcoin and cryptocurrencies on the dips. And now he's going to be very positive for the futures contracts because A, he's a billionaire and he gets to play with futures contracts and buy and sell and know how to, make more money in the market. But he's also encouraging Bitcoin and cryptocurrency because he has his position in Bitcoin and cryptocurrency. We have Katy Perry talking about Bitcoin with Warren Buffett, and she mentions it to her 175 million followers. Warren Buffett, notoriously anti-Bitcoin, typically a very, very smart man, has become a billionaire because of his intelligence and insights in the markets, but has completely missed the cryptocurrency boat vocally. And so here we have Katy Perry, who just asked Warren Buffett his thoughts on cryptocurrency and is now giving this information, this awareness, this visibility to, lots and lots of people, right? Practically hundreds of millions of people who are now learning about this. This is a lot of news. This is a lot of awareness. We're at a point where people cannot ignore this situation any longer. We're at a point where people cannot be silenced about this awareness, especially when people are talking about it on major media news outlets, when the banks are talking about it, when the banks are creating products around it. We're going to start seeing, advertisements for these things on TV, and we're going to start seeing the incorporation of this technology, this industry, into our everyday lives. And so where is this headed? Where is this going? This isn't just all fluffy rainbows and unicorns here. We also have to recognize that on the other side of the equation of Bitcoin and cryptocurrency are the banks, are the governments, and is the fiat dollar. And so we have the White House team who is monitoring cryptocurrencies, according to the press secretary, who says that Bitcoin and other cryptocurrencies are something that are being monitored by their team, that this topic of Bitcoin and cryptocurrencies has been brought up earlier this week by Tom Borsert, a member of the Homeland Security team. And she continued by saying that she knows it's something that he's keeping an eye on and that the White House is going to keep us posted when they have anything further to let us know about it. There were lots of talks earlier this year and last year around the time that Trump was being elected, where people in and around the Trump White House have been historically very, very pro-Bitcoin and positive around Bitcoin and blockchain technology. So that was hopeful information in terms of the way that people in the White House are going to be looking at this industry. And so what we have is that these comments follow the remarks by the White House to the CoinDesk earlier this year, in which representatives revealed that they're exploring blockchain technology as a way to improve U.S. government relations across every level of the government. We talked about this before as well. Efficiencies in the government, supply chain management in the government, has a lot of applications across all industries and lots of applications across all levels of government as well, non-nefarious and nefarious alike. So, and this is just reiterating, as we were saying at the time, there's a lot of enthusiasm within the Trump White House toward blockchain technology. So that's the White House. On the other side of the equation, above the White House, we have the Federal Reserve, and we have the Federal Reserve Vice Chairman for Supervision, Randall Quarles, who says that cryptocurrencies threaten financial stability, and they will continue to pose a threat to financial stability as they continue to gain popularity. At this conference, he warned against the rise of cryptocurrencies, saying that private decentralized currencies could have or will have spillover effects on the broader financial system if they grow too big. If they grow too big, there's too much wealth put inside of them. And then as more and more wealth is entering into cryptocurrencies, that creates more and more dollars that are floating out there. So on one hand, there's printing machine is just printing massive numbers of dollars. And on the other hand, people are giving up dollars, and not just in America, but around the world. And not just with cryptocurrencies, but with the yuan, petro yuan that people have been talking about. Google that. Very, very interesting stuff. Max Kaiser has been talking about that a lot on his Max Kaiser show. That's something that everyone should be aware of and should be paying attention of for sure. And so a lot of additional dollars out there in the world as cryptocurrencies, take away these dollars and cryptocurrencies grow big. This is when the spillover effects to the broader financial system could happen, according to this Federal Reserve Vice Chairman. He says that these cryptocurrencies are not backed by any institution or physical asset, and that makes it really difficult for anyone to get a handle on them. It means that it's unclear what would happen in case of an emergency situation. And when things are not clear in an emergency situation, that's when, that's when interesting things can happen. That's when, martial law can happen. That's when, extreme or sudden laws can be passed. It's very ominous sort of language that the Federal Reserve Vice Chairman is using. And so during the speech, the Vice Chairman goes on to say that risk management can act as a mitigant, but if the central asset in a payment system cannot be predictably redeemed for the US dollar at a stable exchange rate, what does that mean, a stable exchange rate? In times of adversity, then the resulting price risk and potential liquidity and credit risk pose a large challenge for the system. So what does that mean? The price of the cryptocurrency versus the dollar? What they actually mean, right? This is so interesting and so awesome. What they actually mean is the dollar price to the cryptocurrency. It's not the cryptocurrency price of the dollar. It's the dollar price of the cryptocurrency. Because if the dollar price of the cryptocurrency goes out of whack, then essentially what they're looking at and not saying it would be a hyperinflation situation for the US dollar, compared to the cryptocurrency, as we're seeing in Venezuela, as we're seeing in Greece, as we're seeing in Zimbabwe, as we're seeing in several places all across the world. And there's even more places that are teetering on the edge of that becoming a deeper and deeper reality for them. So it's really interesting when you break this sentence down, what they're actually saying, because they're positioning it from their viewpoint, when reality and the data might be looking at it with a different perspective. So this article at CoinDesk.com goes on to talk about the Fed coin and how He goes on to say that talking about rolling out such currencies too quickly can also spook residents and lead to a drop in economic activity, because if people aren't sure, what the future value of a dollar is going to be, or what the future value of a Fed coin is going to be, or what the future value of Bitcoin is going to be, then that's going to decrease the economic activity, because people aren't going to want to spend something if they don't know what that value is going to be, or the way that they spend that money is just going to be different month to month, and that drastic difference would not help the speed and progression of economic activity and overall productivity and production. So he does support the idea of using digital currencies as a secure, limited purpose tools for settlement processes, but they're just having huge amounts of caution, even though we know that they've been looking into these technologies. We know that they're interested in speeding up the transaction times and the settlement times. And it'll be really interesting to see how long it takes for what they say now to be turned around into something else. And so what's happening here? Why is Bitcoin growing with such an extreme pace, right? Is Bitcoin really growing at an extremely high pace, or is the value of the dollar just decreasing at a very high pace? Some people were talking about this with some people at our meetup group, and someone was asking me, well, how do we know that it's one versus the other? Because we're not seeing the inflationary effects inside our country, and we're not really seeing those inflationary effects across the world. Well, since so much of the world uses the dollar, it's harder to see the effects of that hyperinflation. It takes more time. And a lot of people say that the data that we're being given isn't the full picture, or that data is manipulated, or that data is skewed. And when we look at this data, as people have been joking, is not the growth of Bitcoin hockey sticking all the way up. What this is the chart of the number of US dollars that are being printed year by year. And so what you notice here is that you have 2008, 2009, there's this sudden, dramatic, straight shift up. This was after the financial crisis in 2008, when the stock market dropped about 777 points, about 7% of the total stock market lost its value, and the largest one-day drop since the Great Depression. That's why they call it the Great Recession. It was crazy what happened with the Case-Shiller Home Price Index just months before, where home values lost, dramatically and drastically so much of their value. And so what happened is that to prevent the economy from falling into total economic collapse right here, they printed an extreme amount of money to bail everybody out, and shifted the burden of responsibility, accountability, and consequence onto the citizens and the taxpayers of America, of which even those have shifted with the recent tax proposal. And and that's what you're looking. You're looking at all of these dollars being printed. And so think about this. If this was Bitcoin and someone magically somehow printed, 10 times the number of Bitcoin, the value of all the Bitcoin in the world would go down, right? Well, that's what's happening with the dollar. The value of the dollar is going down. And while the value of the Bitcoin might be going up, I think it's more that we're just seeing the value of the dollar decrease more rapidly than the value of Bitcoin. That's what that comes down to. Let me know what you think. Comment in the notes below. And so where does this lead us to? Well, this leads us to extreme times of uncertainty, of possibly fear and confusion, not from just the public, but from the governments and from the regulators, from the bankers as well, because of this chart right here, because of this data right here. This does not look good. And so what Homeland Security is doing, what I'm sure the White House is doing, what the government is doing overall, Congress and the Senate, is that they're seeking ways to monitor Bitcoin, to control Bitcoin, to control the transactions, to control the actions of people, just like they did when they confiscated gold 100 years ago, just like they had done during the prohibition for alcohol. We can see the beginning stages, signs, and steps of this sort of tactic and strategy through everything that's going on. And here's another example right here where we have the CFTC who's urging Bitcoin exchange surveillance to prevent futures manipulation. And so at the implementation or the impending launch and implementation of the Bitcoin futures contracts by the CME, CFE, and Cantor Exchange are getting regulatory attention. And so Bitcoin, a virtual currency, is a commodity unlike the Commission has ever dealt with in the past. And as a result, they've had extensive discussions with exchanges regarding the proposed contracts. And many of these exchanges, including the CME, COBE, and Cantor, have agreed to significant enhancements to protect consumers and maintain orderly markets. It reminds me of that 1984 Apple commercial. In working with the Commission, the CME, CBOE, and Cantor have set up appropriate standards for oversight of these Bitcoin contracts, given the CFTC's limited statutory ability to oversee the cash market for Bitcoin. So what does this all mean? So this means that the CFTC is, wants more regulation, wants more oversight, and they've gotten these three guys to agree to this regulation and this oversight, but the CFTC's ability is still extremely limited in getting every single exchange across the world to comply, although they want that. So part of the statement goes on to continue that the regulator is outlining that to have adequate market surveillance, the underlying cash Bitcoin exchanges will need to share information with their regulatory or regulated counterparts. So in other words, the unregulated crypto exchanges will need to share information to assist the CME, CBOE, and Cantor and the CFTC with this surveillance. And so they want every Bitcoin exchange to give up this information about their exchanges, to give up this information about the trades, about the users. And that's what we're seeing here. And so they're going to be monitoring the trading activity of the relevant cash platforms and the potential impacts in the futures discovery process. And while the regulator fears market manipulation by market participants in the cash Bitcoin market, crypto enthusiasts are fearful of the government and traditional Wall Street taking over the asset class. So the CFTC is expecting to assess this situation as it evolves. They're going to be engaged in a variety of risk monitoring activities. And while the CFTC urges the actions described above, the unregulated Bitcoin exchanges and even the ones regulated outside the US do not need to comply. So they don't need to comply now. But as we know, these sort of actions can be influenced with carrots, they can be influenced with sticks, and there's a lot of ways of getting companies around the world to comply with US and worldwide regulators. So the CME has stated that only the select exchanges, which I already mentioned, will be participating in the formation of its Bitcoin futures price, including Bitstamp, GDAX, ItBit, and Kraken. And if the exchanges that do participate submit their data, others that are not tapped by the CME will most certainly refuse to. Even if that data is submitted by some exchanges, others will still be able to execute orders that could in theory impact prices materially. So even if the CFTC gets some data that won't secure the market against manipulation, is what we're reading in this article. And so it's just really interesting to sort of see this play out. It's really interesting to, recognize that there's a lot of fears in the industry of the Bitcoin futures manipulating the Bitcoin price and the Bitcoin market and other aspects of the Bitcoin industry, including many of the different altcoins and perhaps being a template for controlling other altcoins in the future. And one of the happenings that's coming out of this is the solicitation or expectation of surveillance from these centralized points like the exchanges, which is just creating, more subconscious psychological, emotional demand for decentralized exchanges that can handle the level of volume that a centralized exchange is offering people. really, really interesting. It's going to be really, really interesting to see how this all plays out, how this affects you, how the decisions from the White House come out, how the decisions from the White House are in line with what we've already heard come out from Homeland Security and from other parts of the U.S. government. It's really interesting to see what the steps are going to take place from the U.S. Federal Reserve as they seek to continue getting a handle on the situation. They probably are hoping that the Bitcoin futures, has a great handle on this situation. And if that doesn't work, then they'll have to go have more meetings and more statements to make next steps and next decisions. Very, very interesting stuff. Public service announcement. I had a couple people reach out to me just this past week about losing their Jax wallet, and just wanted to public service announcement, mention make sure you have your Bitcoin backup phrase, seed phrase for your Bitcoin wallet, or for all of your wallets. Make sure you have the backup numbers, barcodes for your authenticator apps, whichever those are. Or, if you don't have a seed phrase, have your private keys, know your private keys, keep those private keys safe, have backup plans for those. What if the house burns down? What if, you need to have backup plans to the backup plans, because part of what's happening with Bitcoin and blockchain technology is that you're being responsible for your wealth. You're being responsible for your portfolios. And that's just part of the game, part of what's going on. So yeah, and come check us out at mintingcoins.com. Feel free to go to mintingcoins.com, make an account. We'd love to see you over there. Feel free to connect with us on Facebook, Instagram, Steemit. We're always posting, always have something to say, always looking for conversation, just looking for more people to connect with and just more people to share content with. It's definitely a lot of fun. It's definitely very interesting. Learning about this information and sharing all this information with everyone out there. It seems as if a lot of the news and information that we go over isn't really talked about in a lot of other places. And, it's just our pleasure to share this information with you. So we really encourage you to tap that like button if you enjoyed any of this information and brought any value for you. Comment to this video, subscribe, share this with your friends. Let us know what you think. Because we're just really excited, and you're probably really excited too. So until the next video comes out, hopefully it will be very, very soon. And until then, I'm glad that together we are minting coins.